This is why I'm buying index funds, folks. This market, pure fugazi. Nothing makes sense anymore. All I'm hearing about every day is Shopify, Palantir. I'm looking for damn value in this market. That's why I don't buy these hype stocks anymore, because they're likely going to kick you in the ass if you do believe in fundamentals at some point in the future, because there's no value there. And we're living in a world right now where all these companies did all these major layoffs. They all started focusing on big time money, baby. Let's print them dollars. And it really worked out. They benefited shareholders greatly. Look at Meta stock. You know, everyone at home driving into these e-commerce plays and these advertising plays only to get the shit kicked right out of them into the toilet. And here we go, guys. Meta exploded, turning their company around, focusing on that juicy EPS, that wonderful free cash flow. Shopify, another beautiful example here. Hell, if you bought Meta stock since the beginning of this year, you'd be up 86%. Shopify, 72%. These are stocks that I was saying would be pretty good buying opportunities, right? I mean, I should have bet on Shopify. It just seemed so easy at the time after watching Meta explode. And you're like, hey, maybe I'll make the same bet. Maybe I know PayPal is doing the same thing. They're laying off employees. They're focused on cash flow. It's a mega giant cap company that's one of the 5 largest downloaded apps and, you know, global payment transactions for the e-commerce realm of things, and damn it, did that work out? Hell no. This thing is in the freaking toilet, and I want to share with you some damn comparables here on why this is just so nonsensical, why I should mortgage the farm, bet the chickens, and, you know, sell out the wife to the neighbors, because god damn, man, I just can't get over these numbers. This stock, I think, has the real potential to follow in suit with Facebook. I think this thing is going to potentially do a pivot, and it is going to explode. And if you have the fortitude to be buying this in a market like this, you should be doubling your damn money. This thing just hit a 52-week low. It's down like on a 7-year basis. Look at the 5-year, it's down 23 damn percent. This thing is acting as though this is the damn 2008 financial crisis. Maybe it's just basketed with a bunch of these ETFs that hold financial stocks, and I was like, I don't want anything to do with those, and they're just ditching them. But let's get into the numbers. First number that I want to point out here is this company trades for $69 billion in its market cap. Meta is trading, or not Meta, let's not focus on Meta. Let's do a Shopify comparison, because they're both in the e-commerce realm of things, kind of comparable. You know, they both kind of work hand in hand pretty resiliently. Shopify trades for almost $80 billion. It trades for $10 billion more, give or take, right? But let's talk about the revenue here. For 2022, Shopify was able to generate about $5.6 billion in revenue. Their gross profit was only $2.7 billion. Keep those numbers in mind, 5.5, 2.7, compared to the good old PayPal here that did $27.5 billion in revenue and $13 billion in gross profit. Their gross profit was over double the entire year of revenue for Shopify. I mean, take a look at some of the balance sheet here. You know, total assets $10 billion against $2.5 billion in liabilities for Shopify, and it's kind of hard to do some comparables here because PayPal, a lot of their liabilities comes from a stance of customers keeping money on the platform. They do consider that money on a platform an asset and a liability, but even still, $78 billion in assets against $58 billion in liabilities. So they got like $10 billion in underlying assets. Again, they're in a very intriguing position here. It doesn't make any damn sense. How is this company not double the value of Shopify? So maybe it has something to do with their growth. Maybe it has something to do with their earnings. Maybe there's just something horrible going on, and we're going to talk about the most horrible metric I was able to find from this company's earnings. But first and foremost, can we just admire that, you know, talking about the massive scale of this company, they have 435 million active accounts. Look, I don't like Shopify. I don't like PayPal because I make foreign income, and some people like to pay me through PayPal as a trusted provider. And PayPal forces me to convert that currency if I want to put it in my actual bank account. I can't pull US dollars being a Canadian out in pure cash, so I try and do wire transfers and avoid it. However, it's still a main app on the front of my Apple iPhone. And, you know, everyone's talking about the competition. Everyone's talking about Apple Pay, Google Pay. And yeah, I use those things, but I ain't using those things for international transactions with private contractors, as I'm sure many people are in similar situations. So PayPal still sits on the front. I know Cash App's a good competitor. There's obviously competitors in the space, but this this thing is growing at a 14% 5-year Geiger, damn it. Total payment volume is at $1.36 trillion. I mean, that is the scope and scale of literal major financial institutions. Net revenue, $27 billion at a 16% Geiger growth rate. Are you effing kidding me? And free cash flow is at $5.1 billion. And that is a 22% 5-year Geiger growth rate. I mean, is there a business that you'd want to buy at a more fair valuation than a company like this? Let's talk about guidance here, guys, because there's a few things going on that are negative. What is the bad? There's always the good, the bad, and the ugly. And I'm not going to be trying to do 100% bullish sentiment saying this is the buying opportunity of a lifetime. Just talking about free cash flow, first and foremost, it had a reflected headwinds from higher expected cash taxes. I looked into it. Their taxes, they were up a few percentage points. There's a few headwinds on their margins. They're shrinking slightly. Who, heaven forbid, on a company that has seen, non-GAAP EPS growth of 20%, actually higher than their expected guidance, and they're raising guidance. Can you name one company right now in the tech industry that has raised their guidance for this year? Apple's not even raising their damn guidance. And the coolest thing about it is they're repurchasing about $4 billion in shares. That's like, man, what is that? That's over 5% of their current outstanding shares, and if the stock keeps dropping, that's even more. So I mean, you're getting a backwind of a mega cap company throwing $4 billion back into shares, giving you a bigger piece of this juicy pie if the growth rate continues. Should I just put money in this? I don't know. I'm sitting on a bunch of cash. I'm like, I'm not going to use it for a year. Maybe this would just be a good parking place if I could stomach the damn volatility. I don't know how this thing is still dropping. Like I said, I can't wrap my head around it. Look at total payment volume in the billions, 355 billion just in Q1 of 2023. My God, taking a look at the cross-border trade. This is kind of declined slightly, but it is holding flat. It's still doing very well. Transactions and engagement are continuing to grow. This kind of looks like Meta stock. I mean, all their bottom line metrics are growing. There's just nothing bad I can pull out of their bottom line users, their bottom line transaction values. Taking a look at the broad picture of it all, I mean, non-transaction related expense declined 12% year over year from them laying employees off. Free cash flow, all these numbers, man, all these numbers are just unbelievably astounding. And I'm just sitting here doing these comparables, and this is better than TSM. I mean, this isn't like some foreign entity. This isn't some like super disruptible industry. Obviously, every single person right now wants to be in a payment providing system. Everyone's trying to do payment transaction. Apple, them all. They all want to be in this game because they see how much money PayPal makes. PayPal is like the OG. But a lot of people, and including in the e-commerce realm, it's so unusual for people not to want to pay with PayPal. If you run a Shopify store, PayPal is one of the big buttons that come up. It is just, it has that history, that branding power that says, hey, I trust using PayPal. I trust if there's issues I can roll back. I listened to the earnings call, and they're saying because of them adjusting bugs, using AI and working with all these systems, they're actually seeing less basically fraud on the system. They're saying they're seeing less issues on people calling in for problems with transactions. They're doing better all the damn time. And I don't know, should I bet the farm on it? Should I just throw 10 grand in it for fun? I always just feel like if I just put money in this, would it make an impactful difference on the scope of my $400,000 portfolio of 10 grand? Not really, but I want to make a point. I just want to make a point that, if this stock doesn't go up, or if something just doesn't fundamentally deteriorate, I'm just going to be pissed off. I'm going to be pissed off this market doesn't make any sense anymore. Just, Fugazi, baby. But I'll pass that question off to you. Let me know what you think in that comment section below.